So let's talk about why you shouldn't Google your stocks. And I want to give you two very specific examples. You see, a trading strategy, and this is super important. As a trader, you do need a strategy. A trading strategy answers the following three questions. Number one, what should you trade? Number two, when to enter? Number three, when to exit. So these are the three key elements of a trading strategy. And when it comes to when to exit, it's either when to exit with a profit or when to exit with a loss. Now, here's the difficult thing. I firmly believe in trade what you see, not what you think. This is why I have a coffee mug that is facing me all the way, and I will show you why. So I'm personally trading two different strategies. I'm trading the PowerX strategy, and I'm trading the wheel strategy. Now let's jump right on the chart, and I want to show you a stock that I have been trading, PAGP, according to the PowerX strategy. This is where PowerX Optimizer, the software that I like to use to find the best trades for me, said PAGP is a great buy at $9.30. PowerX Optimizer also tells me, well, you know what? You have 60% chance of being right, meaning that 40% could be wrong. So 4 out of 10 trades, I can expect to be losing trades. 6 out of 10 trades are winning trades. So there's no strategy with a 100% winning percentage. Anyhow, I also get my stop loss and my profit target. And again, therefore, I know exactly what to do because I know what to trade, I know when to enter and when to exit. Now, here's the challenging thing when you are looking at Google, because you see, PAGP today hit my stop loss. The stop loss was at $8.72. So this is when I'm wrong and I'm getting out. As you can see here, the stop loss is smaller than my profit target. So I'm risking here $200 trying to make $400. So depending on your account size, it might be different. You might risk $1,000 trying to make $2,000 or $10,000 trying to make $10,000. Doesn't really matter. The key is that you get out as soon as the stop loss is hit, because otherwise this could turn into a larger loss. Now, what does all of this have to do with Googling what your stocks are doing? Well, let me show you what happens when I Google PAGP stock, which is exactly this stock, and I'm getting 53,600 results when I'm going to the news. And you see, the Union Journal, for example, says you need to see this stock. So that probably means that it's a good stock, right? And MarketBeat says, Plains GP Holdings expected to announce a quarterly sales of $7.74 billion. Well, that sounds good, right? I mean, their sales seem to be up. PAGP upgraded, issued by Wall Street, whoever. I mean, we can click on this article here. Oh my gosh, this is called the News Heater. Must trust this website, right? It went up by 1.89%. Is it worth investing in PGLP? You get the idea. Oh my gosh, you can subscribe to a newsletter here. Then you see billionaire Jim Simmons places a bet on 3 high-yield dividend stocks. Long story short, if you look at the news, you might say, oh my gosh, this is a great stock. I should hold on to it. But here's the challenge. When you hold on to a stock, and look at PAGP. I mean, during the pandemic, they got hit hard, then they bounced back, and then they went all the way down from 13, cut in half by 50%. And you see, this is the really super difficult thing if you trade based on what you think. Don't do this. I want to show you another example. So the second strategy that I'm trading is the wheel strategy. And according to the wheel, I have been trading NIO for the past few days. And I said, you know what? I think that NIO will stay above $33. I exited this trade. Either it was late yesterday or early this morning with 90% of my profits that I could make on there. But you see, if you're watching the news right now, so NIO, the Tesla of China, what do you think? What is NIO going to do? Is it going up or is it going down? Well, let's check the news, shall we? So if we Google this, we see, okay, could NIO stock really get delisted? So you know that right now a bill is being passed or has been passed where possibly Chinese stocks could get delisted. Now, if they're getting delisted, that's of course not good. So this is sending the stock down. But then, Yahoo Finance says, will NIO stock reach $100 by 2022? Well, let's see. Right now it is trading at $44. So they are really, really bullish on this. Then Goldman Sachs picks 2 electric car stocks to buy and 1 to watch. So probably Goldman Sachs has it on their radar. But then also we say, oh my gosh, why NIO stock lost 20% of its value last week? So you see, you get all conflicting messages here. You can just go on. And this is the challenge. You can make a case for or against NIO. The challenge is that you will be biased. Have you ever heard about the red car syndrome? The red car syndrome, or the red car phenomena, means that if you are buying a red car, suddenly you see red cars everywhere. And this is what's happening when you Google your stocks. When you Google your stocks and you have an opinion, you will, I guarantee you will find an article that is supporting your opinion. But you know what? The market doesn't care about your opinion. This is why I like to trade with very hard facts. And this is what this show is all about, right? I mean, if you're enjoying this video, make sure that you're clicking like, because this way I can show you more videos like this. Anyhow, I know when to exit before I even enter a trade. And when my stop loss is hit, I'm exiting right away, because I have learned it the hard way over 20 years of trading that I should trade what I see and not what I think. And Googling your stocks will help you, or will make sure that you're forming an opinion, and often you're holding on to a stock for too long. Has this ever happened to you? If it ever happened to you, leave a comment, because I'm just curious. In the beginning of my trading career, it happened to me. Right now, I could find a case of why I should hold on to PAGP, although I know, based on the past performance of the year, I should get out right now, and I can always re-enter this stock. I can always get in. That's a beautiful thing. These days, commissions are $0 here in the United States. Depending on where you live, you might have to pay a few dollars, but it is so much cheaper than it was way back in the day. So this is my advice. Don't Google your stocks. Have a trading strategy so that you know what to trade, that you know when to enter, and most importantly, that you know when to exit with a profit and when to exit with a loss. Now, let me help you. Is this helpful at all? Because if it is, and if you enjoyed this video, do me a favor and click on like, because this way more people will see this video. And if you're new to this channel and want to see more videos like this, click on subscribe and hit the little bell, because this way you get notified whenever I release a new video. And as always, please feel free to share this video on Facebook, on Twitter, on Reddit, or by email, and I'll see you in the next video.